Hello and welcome everyone to the Commodity Report for the 15th of June 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So a long list of Wall Street banks from JP Morgan to Goldman Sachs to Bank of America are forecasting $150 per barrel crude oil. Now, over the last week, we have seen oil prices break out against euros and British pounds to all-time highs. In fact, over the weekend, we had data from the USA demonstrating that gas prices at the pump had hit their all-time record high. Gasoline prices, of course, last week, they broke out to all-time record highs. Natural gas prices in the UK, in fact, on Tuesday, broke out 30% in a single day. They're up 45% so far this week as we continue to move through the commodity super cycle. And of course, during these times of heightened volatility in the market, it creates massive opportunities for you to benefit, generating huge profits fast. Now, one of the most important skills for you to develop to become inflation-proof and recession-proof is trading. You cannot rely on just one income stream. If you've only got one income stream coming from your job or coming from your business, you're going to be in big trouble as we continue to ride through this current storm and head into a recession combined with double-digit inflation here as well. If you've just got capital sitting in a bank account, that of course is eroding in terms of its purchasing power every day. The cost of living is going up every single month, with energy prices at all-time highs, food prices the highest in a generation, and of course the highest levels of inflation that we've seen in 40 years. Now, over the course of this week, we do have a major news item which you want to have on your radar. That, of course, is going to be Wednesday's FOMC statement. So as it relates specifically to the trade opportunities that we see at the moment, we discussed with you on the week ahead commodity report, big opportunities that we took advantage of on gold last week. So gold, ahead of the CPI data, was under pressure last week. We took the opportunity to build into 4 positions as gold was selling off ahead of that data on the Friday. Subsequently, after the data, 500-point slingshot move higher for gold, breaking out to 1-month highs into the close. So we took the opportunity to bank into strength, to be nimble, protect all of those positions. And then what have we seen at the start of this week? All the way back down towards 1-month lows on the metals, which yet again, if you've banked at the highs, this enables you to then reload back in at the lows and take advantage of the whole cycle. Yet again, we keep seeing this in the lead up to major central bank news items and also key data points. You will see markets move into risk off. We have the dollar breaking out to 20-year highs at the moment. Once that news item is over, then typically you see a relief rally, and this is where you can see risk on and very fast profits generated in the commodity market. So I'd absolutely look out for that off the back of Wednesday's FOMC statement. That will be at 7 o'clock London time. 30 minutes afterwards, you have a press conference. Now, moving over to natural gas prices. Although we've seen a 45% spike to the upside in UK prices this week, natural gas prices in the USA, they dropped 18% in a single day on Tuesday, the 14th of June. So, of course, this again sets up for a massive buy opportunity. Some of the risk-reward profiles of commodities right now, with the current volatility that we see in the market, are extremely attractive for you to generate huge profits fast with this current volatility by yet again being patient, waiting for these big corrections, the volatility to cause price action to sell off back down to key areas of liquidity, then sniper in, picking up much lower prices. Very much like we've seen on gold this week. So we saw on Monday, 1-month highs tested of $1,877 per ounce. By the end of the trading session on Monday, gold prices, they broke down to 1-month lows, trading back towards $1,800 per ounce, over a 700-point pullback, yet again giving you further opportunities to accumulate much lower after booking over 500 points profit on Friday off the back of the CPI data. So, of course, just for that calculation, every 1 lot contract that you'll be trading, a 500-point breakout in the matter of a few hours, which we banked with our clients at the Gold and Silver Club on gold. In fact, not only one position, we had 4 trades on, but that calculation, every 1 lot contract that you'll be trading, that's $5,000 of profit. Every 10 lot contract that you'll be trading, that's $50,000 of profit. Again, you cannot just rely on one income stream in the current economic climate. You want to make sure that you're inflation proof and also recession proof. What we've seen over the last few weeks here is a huge rotation out of the cryptocurrency markets, out of the equity markets, out of the forex markets and into commodities, propelling this commodity super cycle. We're still only at the start of a decade-long super cycle. Goldman Sachs, JP Morgan, Bank of America, Berkshire Hathaway, so Warren Buffett, his largest position now is being long commodities, and we do definitely not want you to miss out on this massive wealth generating opportunity. So with that, if you would like to learn the research driven approach to the market, ditch those technical analysis and gimmicky indicators, as I mentioned, on the week ahead commodity report. It's not 1980 anymore. You don't just need to use technical analysis and draw patterns on your charts to work out where to get into positions. You need a lot more edge than that. You want to be utilizing data, statistics, market intelligence alongside that, learning and understanding the daily, the weekly, the monthly, the quarterly cycles for each commodity, the capital flows in the market, the key areas of liquidity, the ratios, the intermarket correlations, and of course the geopolitics, the fundamentals, the macroeconomics, and further combine that with how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.